4X Live is a very good source for running commentary on markets and news. They had a news release on the Swissy earlier this week, and he uses that with Bloomberg Radio. Thank you, Ken. That's very good information. So again, another piece of information coming in from one of our traders. Ken is saying that he likes 4X Live as a source for running commentary on markets and news. And he's saying they actually talked about the Swissy earlier this week. So we need to know that, guys. We absolutely need to know that. And he uses it in conjunction with Bloomberg Radio. Thank you, Ken. Much appreciated. Now, that's an example in the Swissy. Let's take a look at the... that's an example in the USD CAD. Let's look at the USD Swiss. Just pure raw action. Let's bring it out to a daily chart. Just price action only. So down, 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 down we go. This dramatic run down. That's dollar weakness in Swiss franc strength. Look at this massive down run. That's close to 5,000 pips. And yet we see as the stock market starts heading down and Swiss government intervention, this baby spikes up 800 pips. That's the Swiss government trying to stop their currency from overheating or being overvalued. Because what happens when the currency is overvalued, guys, it becomes more expensive. So, for example, if I want to buy a Swiss watch and it's priced at $2,000, but I have to then repatriate that back to Swiss franc. If the Swiss franc keeps getting weaker and weaker against the US dollar, that watch is going to keep costing me more and more money. So right here, the Swiss government decided enough is enough. They poured in huge amounts of money and the currency spiked up. And then today, we got this further little spike up because the stock market was going down. And then the last one I want to look at is the USD yen. I'm spending a little bit of time on this, guys, because it's very important. We know what the heck we're doing in this market. Yen strength, dollar weakness. Take a look at that chart. Boom. Down, 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 down. And this spike, this spike here, Japanese intervention. It was alleged that they poured 2 trillion yen into the market. And they managed to spike it up about 350 points. But then the market decided, you know what, we don't care, and brought it right back down again. The only blip they got was this little blip today as the dollar gained strength, but not against the yen. It's just way, way weak against the USD against the yen. Now, one other factor to take out of this. If the Japanese government intervenes to the tune of 2 trillion, and it's only capable of moving this market 300 pips, only to have it immediately drop back down again. That's 2 trillion gone, washed away out into the ocean, gone like it never existed. It gives you an idea, guys, of just how big the Forex market is, that even governments can only do so much. They cannot really control it. It's like a wild animal out of control. And it brings me back to the question many traders will ask sometimes. Would we, as a group, ever impact this market? And the answer is not in a million years, guys. Never, never, never. So we could never intervene to the extent that it would drive the market in any significant way. Now, when Bernanke and these guys speak, you definitely see blips in the market. You see these big spikes on these daily charts. And again, there's one coming up when the Fed meets at this meeting in Wyoming. I think it's next week. We definitely want to watch that, because the word on the street is, those of you who are watching Bloomberg, Reuters, whatever, that there'll be some kind of announcement of some kind of money pumping back into the U.S. economy. May not be called QE3, it might be, but there'll be something going on that will automatically weaken the U.S. dollar. if that happens. So watch for that next week, guys, and be ready with your currencies, with the euro, with the British pound, with the Swissy, with the yen, all those cross currencies that are crossing with the US dollar. Just know that that's coming. Now, when America intervenes, it's essentially that. Keep the US dollar down. It does two things. It leaves our exports in the US relatively cheap, therefore you sell more, brings down the GDP. Not seemingly doing it right now, but that's the intention. And equally important, you're paying back your debt at a lower rate. So your debt repayment is cheaper. Pretty simple stuff. That's what's going on. Now back to the charts. I want to take a look at the GBP dollar. Question from Mark. Yeah, trading in the zone will not give you specific information, Mark, on the daily announcements, but he'll talk about that. Yeah, how important it is to pay attention to fundamental news. Know what's going on in your marketplace. Good point, Mark. GBP, USD. I want to leave some time for questions. Let me run through this real quick, guys. Daily chart. What have we got going on the GBP? Again, there was rumors last week that because of the inflation concerns over there, when there's inflation concern, there's a possibility of rate increases. What drives currencies more than anything? Rate decreases or increases, because the money will go where the rates are higher. So you see that nice spike up over the last week, back up on the British pound. Let's take a look at our Fibonacci. I'll draw the Fibonacci in the direction of the overall trend on my daily chart. Let's pull it out now. And you can see the high up here at 167.50 and change. And let's bring that back out. We haven't been here at that level since November of 2009. In fact, it took a huge hit all through 2010, dropping 3,000 pips. So it's 2009 since it was back up at that 167 and change, 167.50 level. I want to mark that because it's very important. That's my top. Again, I see Fibonacci coming into play. Look at the 23 fib. Absolutely. And look at the same thing as the euro. That pullback off the top found support and rested right on the 38 fib. That move down was close to 900 pips. Look to the chart, look to the left of the chart, and we see that, well, particularly that 23 level up here, it was resistance right here. Resistance became support. Support fell through, and we're back now with it as support here. Also notice our trend lines here. Trend lines here. Oh, sorry. Let me get rid of that. This guy. Again, you can see the ranging thing that's going on. The upper end of the range is kind of pushing up. You know, last week or so we were down here. So in that case, we actually, unlike the euro, guys, let me bring that out, because now you're seeing an actual break to the upside of the trend. See it right here? We've candles closing outside our former trend line. There's the break that the euro was unable to do. The British pound got it. So, and that's really to do with those rate increases. So we could have a run back up to test that top. And that's about almost 300 pips away from where we're at right now. Now, I'm going to lose the fib because we marked those appropriate spots. Drop to the 1 hour. Take a look at our 1 hour chart. Left to right. We see the bottom here. Draw the fib in the direction of that most recent move. Leave it on there. Pull the chart out. And there, as you can see, definitely the upward movement here. Look at this trend line, guys. Strong upward movement. Again, it'll pull back right now, but you can see the possibility of it heading back up to test that top. Now, the big top was way above us, but up at, what was the top? Sorry, 1 second. Up at 60. 166. It's at 64. Back to my 1 hour chart. Let me clean up my Rubicon indicator. If you ever want to take your Rubicon indicator back in time, just go to the reserved tab right here. Put in the date that you'd like to see the signals on, and you'll get them there. And if you want to bring it back to the current, just leave that section blank. Click OK, and that'll bring it back up to the current level. And those are the signals on the 1 hour chart over the last week or so. You can see them bouncing up nicely all the way. Very nice signals. Now, where are we at now? We have a pullback here. What I'll check is one last thing. I'll go down to my 30-minute. I want to check one last thing on the 30-minute. What's the action on the Fib in relation to today? Take the high in the last 24 hours. How much did it pull back? You'll remember, guys, that the pullback on the euro was only to the 23% Fib. This time it came all the way back up to the 61. So you see that the push is to the upside on the British pound. Totally different picture. And again, the real reason for that is that possible, even though they haven't announced it, the British government talking about inflation means the likelihood of a further rate increase coming down the road is happening. In relation to the Swiss mark, the Swiss government have been very, very specific. They're intervening to stop the movement in their currency from getting any stronger. The Japanese said the same thing. Please Google that, do some homework, and check it out. Yeah, you're right, Mark, actually, about the recession. We're looking, what people were saying a week ago, no, we're not going to have a double dip recession. Now, we're starting to say, yeah, it's really possible. And again, we just want to be cognizant of that or aware of it as Forex traders. Now, my 30-minute chart, we're coming back. Again, the very important thing, when the currencies are above the spine on your higher time frame, go back up to the 1 hour, all above, where do I want to be on the 30-minute? The optimal trend, the optimal trades then, and we keep talking about that optimal trading, guys, are going to be to the upside north of the spine. And look at that 30-minute chart. Those trades all the way up. And again, because I'm consistent, I can drop to the 15-minute. Because again, remember my rule, go to the 15-minute only if it's consistent with the two higher time frames. So the only thing I want to do on the 15-minute chart is to go long. If that's not possible and you see it breaking to the short side here, I'm not going to take the trade. That does not mean that there will not be trades to the short side. We could get a trade forming here within the next hour or two on the 15-minute chart to the downside. It could come back conceivably and test that bottom here. Certainly could come back and test this trend line. So it doesn't mean the trades are not there. Just know that the highest probability trade, the highest optimal trading is to stick with the 1 hour and the 30-minute, the two time frames above you. And again, you see the signal coming in here. That signal was reached pretty quickly, out of the trade, done. Because it's moving with the big wave, with the big tsunami. Okay, that's kind of our drill down. That's our fundamental, looking at fundamentals. Don't forget, guys, go to rubiconindicator.com/blog site. Have a look around there. The information on version 2.0 released is also the same information for 2.01. 2.01 is just a simple glitch fix. So please take some time, read through there. It'll tell you what the upgrade includes. It has the installation video there. Please, 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 guys, before you send in a support ticket, just spend a couple of minutes on viewing the install. It'll save both you and ourselves a lot of trouble. And then over here, by all means, start throwing questions in now. The student